Good afternoon, ladies and gentlemen. My name is Joseph Casares, and welcome to another edition of the A&J Mortgage Lending YouTube video channel. We are super excited to bring you this question today, which is going to address everything that you may need to know about the home buying process and what exactly you should do first in the process. But before that, as I mentioned before, my name is Joseph Casares. I am one of the senior loan officers for Cross Country Mortgage, and we are super excited to bring you the knowledge and education that we have and that we learn every day about the mortgage and home buying process and what you specifically can do to take the right steps and get yourself into the home that you've been wanting to get into for all these years. So, what are we going to get into today? What is the question that everybody has been asking that is super important and vital to buying a house? Does anyone know? Anybody? Nope? Well, that question would be, what should I do first? And that is the most significant question in the mortgage industry and the home buying and the real estate industry is, what should I do first? What steps should I take to buy a house? And what exactly do I need in order to buy a house? So that is what we're gonna break down today. That's what we're gonna get into, and we're going to basically explain what you should do, how you should address it, how early should you talk to a real estate agent, how early should you talk to a mortgage professional, and what is the first thing you should be doing in order to buy yourself that home that you've been looking at online for the past 2-3 months and you're just not sure if you could get it or not. We are going to explain what it's going to take and how you can get that house. That being said, let's get into the most frequently asked question in the home buying process, and that is, what should I do first? As I said before, this is the most important question you could possibly ask when looking to buy a house. The question that arises most of the time is, when do I need to get pre-approved? Should I go out and look for houses with a real estate agent, find something I like, and then give you a call? Or should I go about making offers on houses and get my offer accepted and then get yourself pre-approved once the offer gets accepted? Or should I do it before I even take my foot out the door and go in to look into somebody else's house that I will be needing a mortgage for? And to address that question, the best thing to do is to talk to a mortgage professional like myself first, or anybody on my team, or anybody in the industry that is going to give you the correct information you need to be prepared and ready to buy this house. Because the pre-approval process is not as simple as everybody thinks. There's so many things that get taken into consideration when getting yourself pre-approved that could jeopardize your deal or could make you not qualify. There's credit issues that could pop up. There's timelines on work histories that could pop up. There's gaps of employment that could jeopardize your deal. Even if you're working right now and you're making over 6 figures and you think your income is great, if you don't have 2 years of work history on the books, you cannot qualify for a loan. If you're starting your own business and you've only been in it for a year, but you're making great money already, you cannot qualify for a loan because you need 2 years of your business to be running for you to even qualify for a loan. And in some cases, they may require 3 years, they may require 5 years, they may require assets. So there's so many different things that go into the mortgage pre-approval process, aside from what you think you make per year and what you think you could afford up to. Because even after the fact that you may have your income down pat and your credit may be 800, you may go out there, get yourself pre-approved for 700,000, 800,000, whatever the number may be, ready to rock and roll, but your monthly payment may be way higher than you're expecting it to be, and it may not be something that you want to do. So these are things that you need to address before you even go out there, and before you're online looking at all these beautiful homes. You need to address exactly what you could afford up to and exactly what you are expected to pay per month and put out of your pocket for down payment and closing costs, because that is 2 completely different things, and it's stuff you need to get educated on before even going out and looking at houses. So we're gonna break it all down right now. So get ready, get your pens out, write this down, make sure you know exactly what you need to do, and when you are done with this video, contact us and let us know exactly what your intentions are, and we could put you on a timeline of 3 months, 6 months, 1 year, even 2 years into the future that is going to make you ready to rock and roll to purchase a house when the time comes. That way you know exactly what to adjust, you know exactly what you need to tackle to maybe get your credit up, or make more money in your business, or go out there and get yourself a job for another year. That way you have enough employment to qualify. These are all things that we can help you with, that we will educate you on in order to get you where you want to be, in order to purchase the house that you like. So let's get into the nitty-gritty of it. All right, so first things first, we're gonna get into what you should be looking for when getting yourself pre-approved, and what are the 3 things to really keep in mind when getting yourself pre-approved and when looking for houses. My personal opinion is 1, how much is my monthly payment gonna be? 2, how much money do I need to bring to the closing table in order to fund this loan and get myself this house? And 3, what is my credit score? Because your credit score is a main determining factor, along with your income and along with your assets, that is going to qualify you for this mortgage. And your credit history is super, super important. And what you have done over the past 3, 4, 5, 6 months to a year, 2 years, no matter how long it will be, every bank is going to pull your credit report and look at your full credit history and see exactly what you have on there as far as your collections, your liabilities, monthly payments, bankruptcies, foreclosures, anything that could possibly be on your credit report, we will see, and all of that will be taken into consideration when looking to purchase a house. So first things first, you want to get yourself pre-approved. You want to make sure your credit is in good standing and enough to qualify for a loan, because that could possibly make or break your deal. And especially with the tough times that we're going through right now, a lot of these other lenders and banks are tightening up their guidelines, meaning that we used to be able to qualify people with as little as 620 credit score on a conventional loan, which is a standard 20% down, traditional loan, or even the government insured loans, which are FHA loans. We used to be able to go as little as 580. That unfortunately isn't available at this time. So if you got a pre-approval 2 months ago, 3 months ago, it may no longer be valid because they have tightened up their guidelines and what they are currently funding. So please keep that into consideration as well. With the tough times that we're going through and the banking institutions tightening things up, you want to talk to your mortgage professionals and make sure that your pre-approvals are still in good standing. And especially if your job is temporarily laid off or furlough, or whatever the situation may be, address this to your loan officers. Make sure they know these issues up front, because moving forward, when we get out of this pandemic and everything starts going back to normal, a lot of the stuff that is happening now may affect your pre-approval process moving forward, depending on if you had any late payments, or, God forbid anything severe happens. We will need to address this, and we will need to know exactly what happened during this time in order to get you the best pre-approval. So that's why it's very, very important to talk to an educated mortgage professional who is going to break down everything in the mortgage process that you need to know in order to get yourself ready to rock and roll and get your loan qualified and approved through the lenders. So that being said, the second thing you should do is find out how much your monthly payment is going to be. You can get pre-qualified up to whatever you possibly like based off of your income, but what your mortgage professional should be asking you is how much can you spend per month on your housing expense, which doesn't include your utility bills, your credit cards, and all your other things that you may have to pay. Doesn't include food, doesn't include gas, doesn't include your car, doesn't include any of that stuff. It just is your property housing payment, which you need to know, because there's a bunch of things that could possibly go into it depending on which type of property you're going to buy, which is another thing I'm going to get into probably later in a video, because it's so important to understand what different properties can basically do and change on your loan approval, and make your monthly payment change in amounts that you possibly don't want to exceed. So that being said, find out exactly what your monthly payment would be around. You're not going to get an exact estimate right away obviously, until you get closer to closing your loan and you lock your interest rate and you know how much your purchase price is and you know how much you're putting down. But at least at this time, you're gonna get a general estimate. I personally like to overestimate everything. That way, at least you know this will be worst case scenario if I find a house with the most taxes it could possibly be, and my homeowner's insurance is the most it could possibly be, and my interest rate is the highest it would possibly be. What is my monthly payment gonna be? That way, if things get better, or if you find a house with less property taxes and less homeowner's insurance and the rates go down and your interest rates are better, your monthly payment is less than expected rather than more, because you could be getting pre-qualified for an amount that's the max of your budget, and then go out and find a house that's a little bit more property taxes than you were quoted on, and your house can possibly go up $100 to $200 a month, which is major when qualifying for a loan. So these things are just small things that I haven't even realistically tapped into how deep they can go, that can majorly affect your pre-approval and what your monthly payments could be. And lastly, please pay attention to how much money you need to spend out of your pocket with closing costs and down payment. The reason why I stress this, and the reason why you should know this before you're even looking at houses, is because closing costs can vary depending on the state and the location. So even the specific house, your closing costs will vary, because a bulk of your closing costs is what they call an escrow account, which is your property taxes and your homeowner's insurance. So if my property taxes are $12,000 a year and your property taxes are $5,000 a year, our closing costs are going to be way different, because I'm paying $1,000 a month in property taxes and you're paying, let's say, 400 and something. So your closing costs have 2 to 3 months of that reserve that are going to be put away. So my closing costs are going to be a little bit more than yours. So that's just a small example of how they could vary and why you should get an estimate on what your closing costs and your down payment will be, because it is very important to be knowledgeable about it. That way you could go out and you could say, okay, I talked to Joseph. I know exactly what I'm expected to pay out of my pocket. I know roughly what my monthly payment would be about, and I know that my income is good and my credit has been checked, and I am ready to rock and roll. That way, when I go out and I find the house that I like and I make an offer, I know exactly what my payment would be, and the real estate agent on the listing side will know that your pre-approval is coming from a good source. We'll jump on the phone with them and we'll be able to say, hey, yes, we pre-approved them and they're ready to rock and roll. All of their documents have been taken into consideration, and the loan process won't take more than 30 days. And that is music to a listing agent's ear, especially when there's multiple offers on a property and the seller's ready to sell and they just want to get a strong pre-approval and strong buyers to buy their house and take over without having any headaches or any hiccups along the way, because there's so many things, as I mentioned before, that could possibly pop up in the home buying process that could jeopardize your deal. And you need a mortgage lender and professional to be on your side to not only explain what is going on to you, but to work through these problems as they may arise through the loan process. That way you don't jeopardize your down payment, and that way you don't lose your hard-earned money by doing something that may jeopardize your deal without you even realizing it. Like, let's say going out and getting a car while you're going through the mortgage payment, or getting excited and going to Best Buy and buying yourself some appliances before you close on a house. Now you're opening up a trade line on your credit, which could decrease your credit, which could disqualify you for a loan. 90% of these mortgage professionals, if that happens, is going to kill your loan. That's it. And your down payment is at jeopardy because you are at fault for not being able to qualify for the loan. So you guys need to realize that you could possibly jeopardize your hard-earned money without even closing on a house by going out and doing something that you think is harmless. So that's why it is super important to talk to a mortgage professional like myself. Get yourself educated on what you could afford up to. Get yourself educated on what your monthly payment is going to be, what your closing costs are going to be, and what your current credit standing is in, and if you could improve it or not. Because if you could improve it, then you get a better interest rate, then you qualify for more, or if you don't need to qualify for more, your monthly payment is less, and you save on interest over the life of your loan. So, that being said, I hope you guys enjoyed this information. I hope this was helpful for you. And I really want to stress the importance of getting yourself pre-approved and talking to a mortgage professional before going out looking for houses if you aren't buying the house cash. If you're buying the house cash, of course, go out there, provide your realtor with a bank statement showing proof of funds, and then you can go out and look for houses within your price range. If you need a mortgage from a bank, get yourself pre-approved first. I don't care if it drops your credit 5-10 points on the initial pull. It is going to benefit you majorly going forward in the mortgage process and the home buying process, and it's going to help you and your family get into the beautiful house that you want a lot easier than you may have expected. So that being said, once again, my name is Joseph Casares. We work with Cross Country Mortgage. Andrew and Anthony are with us as well. We are all part of a team trying to bring you knowledge and education on the mortgage process, and we cannot wait to hear back from everybody with the questions and the concerns and possibly even the journeys that they have been on in trying to get themselves a house. And we are more than happy to help you in any way possible, so please feel free to reach out at any time. Click the like if you guys like the video. Subscribe to the channel. We will be providing weekly updates of how to get yourself pre-approved and just the mortgaging process itself and different aspects of the real estate field as well. So thank you very much. Continue to stay safe and healthy, and we look forward to seeing you next week. Have a good one.